In the first quarter of 2017, stocks posted a total return of 6.1%. That followed a return of 3.8% in the fourth quarter of 2016, 3.9% in the third quarter, and 2.5% in the quarter before that. For the 12 months ended March 31st, the total return on blue-chip companies in the Standard & Poor's 500 index, if you include the reinvestment of dividends, was 17.2%. What a great run! For months, politics has captivated the nation, but at the same time, better-than-expected economic data streaming in month after month propelled stock prices higher. The nation's largest publicly held companies recovered from a 2016 profit collapse in energy and mining, and after the November 8th presidential elections, expectations of a major tax cut under President Trump catapulted share prices to new all-time highs. Since the near collapse of the world financial system in 2008, stocks have staged a history-making comeback. In just 5 years, America's largest publicly held companies nearly doubled in value. From mid-2015 to mid-2016, stocks went sideways, enduring 2 frightening plunges along the way. And then, in the second half of 2016, prices broke out. The likelihood of a bear market, a drop of at least 20%, increases as the 8-year bull market grows older. However, conditions that have accompanied bear markets in the past, such as restrictive Fed policy, slowing economic growth, stock price over-evaluation, and irrational exuberance, were not evident as the second quarter of 2017 got underway. At the helm of the Federal Reserve, Chair Janet Yellen has steered steadily but slowly toward rising interest rates. The economic tide has changed and the pace of growth has picked up, and, barring unforeseen obstacles, growth can be seen on the horizon. If you're just tuning in, America has recovered completely from the worst prolonged economic crisis since the Great Depression of the 1930s. Just released data shows unemployment in March sank to 4.5%. Unemployment has not been this low since bottoming at 4.4% in 2007, at the peak of the last expansion. Not surprisingly, job creation in March slowed, which is to be expected as the country has reached full employment. This economic expansion has entered a new stage in the cycle. The labor market has tightened and wages and benefits are accelerating. The Standard & Poor's 500 is within 1.5% of its all-time high, and stocks have been on an amazing run in recent months. But a military strike to chemical weapons used by Syrian President Bashar al-Assad against his own people and North Korea's unrelenting effort to obtain nuclear weapons that could strike the U.S. have heightened geopolitical risk lately. In addition, there is no clear way to pay for a cut in taxes, and worries are mounting about whether stock prices will drop if Congress and the President can't agree on a way to make the cuts. A correction of 10 or 15% could come at any time. While risk and uncertainty are always possible, economic data has been stronger than expected for many months, and consumers are in the best shape in years. Better than expected growth could propel stocks higher still. Long-term investors, don't be distracted by near-term uncertainty, and try to stay focused on what's beyond the next crisis, drop, or surge.